These next 2 hours. Well, as Dagan indicated, markets actually ended up on the week. Is that a signal that the worst could be over, or is this Freddie Mac Fannie Mae development something to worry about? Let us ask Charles Payne, Cheryl Casoni, Tobin Smith, and Wayne Rogers. Cheryl, the basic message is that Freddie Mac and Fannie Mae can't take on larger loans. That's the gist of it. And Wall Street had been looking for some sort of relief like that. It didn't get it. What happens?
Wall Street is looking for a lot of relief from a lot of places, and they're not going to get it for a while. Look, Wall Street's got to realize they've got to work out these issues on their own. That is what the government told Fannie Mae and Freddie Mac on Friday. So at this point, the market, look, they've got this infusion of cash. You've got a little bit of a confidence factor back into the market as of Friday trading. Look, we closed the week up. We had stability yesterday from 11 o'clock on. At this point, there's a lot of phone calls happening this weekend, I can tell you, with market players trying to figure out how to play this on Monday. But when you've got somebody like Carl Icahn, love him or hate him, coming into the market this week and starting to buy some distressed properties, that's when you see a turnaround. I think that's what we're going to get in the next few weeks. Some volatility, but nevertheless a turnaround. That's
interesting, Charles, because I heard the thing about Icahn. It reminded me like Peter Lynch and some of the others after the '87 crash who were buying. Not a lot of folks are doing that, though.
Right.
Does that worry you?
No, it doesn't worry me, but, you know, I think we're going to have a scenario next week that all really depends on the economic data. I think Wall Street is trying to force the Fed's hand, you know, and they've always had this fight where, even though the Fed says they don't watch the market, obviously the market's a proxy for the economy, so to a certain extent, they have to find a way to, you know, stem the tide. So the PPI, CPI numbers next week, that's going to be interesting. If they're benign,
wholesale and retail inflation.
If inflation isn't benign, that's going to say to Wall Street, you know what, that's the green light for the Fed to go ahead and cut rates, rather, and I think the market's going to be up big if those numbers are benign.
Normally, I would agree, Tobin, with Charles Payne. A, because he can beat me up, but B, because he's such a smart guy. But, Tobin, I think the markets are driven a lot by hedge fund exposure to mortgages, and even though it might be irrational and overly cynical, the more we find out about others who might have exposure, this French bank, Paribas, that was exposed, the more we sell off. Is that going to be the mood setter?
Well, Neil, look at Monday, and you got to, you know, you've been taking a 50,000-foot level look here, so let's go up a little bit. The biggest issue that hit Thursday and Friday in equities, not in bonds, not in collateralized loan obligations, but stocks, was that these huge quantitative funds, these funds that control literally $250 to $300 billion of, by the way, mostly the same stocks, had redemptions, and they were down. Goldman Sachs quantitative fund was down 26%. And when that happens, you get forced selling because these guys use 4 or 5 times leverage. We had a big flush out on Thursday and Friday.
Well, how do we know? Okay, Wayne Rogers, how do we know we're flushed out?
I don't think we are, Neil. You know,
well, not completely. We had a big flush out.
Well, the big problem here is that we do not know in the banking system how many delinquencies there are and the extent of those delinquencies. This is a Band-Aid in the meantime. You pump money into the system, which is really a cosmetic thing. It helps, yes, it softens it, but it does not cure the problem. The problem is still there, and it's going to exist for some time until we get this straightened out. That is to say, you're going to have delinquencies, then you're going to have foreclosures, and you have to go through that cycle.
So that means that in the meantime, when you're saying there's more selling to ensue.
That is correct.
Okay,
yes, there
Cheryl,
is
what do you
going to be
make of
more
that?
liquidation.
The one of the precipitants for reselling is this news that Freddie Mac and Fannie Mae can't come to the rescue. What do you think?
Well,
Cheryl?
Well, I don't think Fannie Mae.
I just want Cheryl to answer that. Cheryl, go ahead.
No, actually, I think that at this point that's something that the street can't look for. I think that it's a mistake to think that Fannie Mae and Freddie Mac are going to get some kind of rescue from the government. They're not going to get it. Look, the market's got to work through these issues, and a lot of people made a lot of money on these subprime bets. The minute that we stop talking about subprime, we quit seeing that in the headlines across papers across the country, Wall Street can get back to business. I think they're trying to do that right now. But when you've got my parents, my cab drivers, what's subprime? This is really bad, isn't it? That's the point where you think, you know what? Hey, look, we're in the eye of the storm, but we're going to get through the storm, and that's where I think we are at this point.